In this session, we're going to be going through a little bit around why the number of landlords have decreased and the implications for renters and investors. As we progress, just a quick advice disclaimer: the information provided in this presentation is for general informational purposes only. It does not constitute financial, legal, or tax advice. The content based on this is based on current market trends and general principles of property investment. It is not suitable for anybody's specific circumstances. If you are looking for professional advice tailored to your specific goals, your financial situation, and your needs, please consult with a professional, whether it be a financial advisor, mortgage broker, legal professional, or otherwise registered tax agent. Please seek their results, please seek their advice. Otherwise, if you're looking for property advice, please don't hesitate to give me a call. All right, disclaimer over. Now, according to the ATO, the annual change in the number of investors has reduced. This is one of only 3 other periods in recent history: 2008 during the global financial crisis, 2019, 2020, which was part of it may have been to do with COVID. However, because it's based on a financial year, largely in Australia, COVID lockdowns really didn't happen until March, April. And typically you can see the decline from 2017, 2018 was when they introduced lending standards, which reduced people's borrowing capacity, okay, which made things a little bit more difficult to borrow money. Landlords, or investors rather, there were fewer of them in the market, and some were forced to actually sell their properties. And more recently in 2022, 2023, that's when we had the sharp rises in interest rates between end of 2021 or start of 2022 rather, right on through, and we had a sharp rise in interest rates, which actually reduced in a lot of which actually incurred a lot of investors actually selling their investment properties as a result. So what that has meant is that there were actually fewer investors, fewer landlords out there producing producing a rental income. Now, this data is the number of property investors declaring a rental income, whether it be one or more properties, then this is the actual number of landlords. As we move on, we've got some more ATO data that shows the rough number of properties and the reduction of those investors who have reduced in numbers here. So in terms of their cohort. So the percentage change in size of each investor cohort between 21-22 and 22-23. So those cohorts that had 6 or more properties, 5 or more properties, 4, 3, 2, they've all actually reduced in numbers, which shows that it's harder than ever to build a property portfolio, especially in recent history. As we've got higher interest rates, it's harder and harder for those people to build their property portfolio. The number of property investors that own one or more, rather just one, have increased, albeit very meagerly here, by 0.1% is the difference between 21-22 financial year and 22-23. So you can see here that there are actually fewer landlords and fewer rental properties available as a result. Now, what has this done to overall vacancy rates? So you can see here from the end of 2022, which is roughly when lockdowns started to ease across the country, vacancy rates nationwide have dipped dramatically. You can see there the supply has really come off the market, and we've seen vacancy rates of between 1 and 2% here. 1 and 1.2% here as an average national vacancy average across the country. So obviously that means that there are fewer rental properties available, and renters and tenants alike will need to fight for whatever availability that there is, and even fight using the amount of rent that they're willing to pay as well. So this has seen rental growth go up recently, and we had instances where we had 10, 11% rental growth year on year in some circumstances. Nowadays, we're seeing rental growth sit at around about 5 or 6% there. Gross rental yield has largely remained the same. There's not too much volatility there at a national basis when we compare units and houses. Houses, however, have dipped just below the 4% mark there. They've wavered to and fro between sort of 4, maybe even close to 5 in early 2012, and now we're just under 4% as a national average. Units have remained relatively consistent here. They've come up from about 5% to around 5.5%, and they're probably sitting at around about 5% now, as an example. So yields have remained the same. However, when we look at asking property prices, you can see there that between the property prices and the rental yield, because property prices have come up and rental yields have remained the same, this is going to mean that rents have risen in line with property prices. So you can see there that 10 to 15 years ago, we had property prices sitting at just over 400,000, about 420,000 as a median asking price. And now we're seeing median asking prices right up around $1 million there. So almost 2.5 times what you would pay for a house, albeit maybe 20 years ago, just under 20 years ago, 2008, 2009. If we have a look at units have risen from roughly 300,000 to 600,000. So they've doubled in value rather than 2.5 times in value in comparison. As we discussed previously, because property prices have risen and rental yields are roughly the same, this is of course going to mean that weekly rents have come up. So you can see that the rough house rental value is around about just over 700 there. And then as we look at units are just under $600, about 580, 590 there. So rents have definitely come up as a result of the number of landlords that are leaving the markets there, and this in turn has pushed up prices, or one of the driving factors around pushing up prices, because investors are willing to accept a slightly lower yield as more and more competition comes to market. And we can see that rents are starting to stable somewhat here. So we did say previously that rental growth was around about that 10% mark, especially in 2021, 2022. You're seeing rental growth year on year of around 9 or 10%. Nowadays, we're at around about 3.5 to 4%. And part of that is because of the tenancy laws that a number of states have introduced, where they've capped either the amount of increase that you are able to pass on to tenants or the number of times per year that you're able to increase rents, albeit this has put somewhat of a brake on rental increases across the country. You can see combined regionals are up about 5.5%. Australia as a national average is about 3.4%. Combined capitals only 2.7%. So regional WA is the biggest change in year-on-year rental increase with 9.3% there. And apart from that, we've got regional SA at 5.6, regional Queensland at 5.4, regional Vic at 4.8, regional New South Wales at 5%. A number of the capitals still hovering around that 5% mark. Darwin at 5, 4.9, Hobart, Perth, and Adelaide at around about 4.9. The worst is Canberra, followed by Melbourne, and then Sydney. Okay, with Brisbane somewhere between this cluster and the other two capitals. So that being said, this is the impact as a result of the number of investors leaving the market. It's a contributing factor that has actually caused rents to rise in a number of these areas because more investors have left the rental property market. This means that supply is down. This means that the new tenants and current tenants need to fight harder with their dollar to find the rental property. And because we have a diminished supply in terms of vacancy rate, this means that rents have come up in a number of areas, and it's also incurred capital growth in a number of areas because investors will be chasing the yield as we move into a higher interest rate environment. Even though interest rates are starting to come down now, this will provide some relief to the market and hopefully add some supply in those areas where tenants surely need it. Thank you everybody for watching. If you do have any questions, please don't hesitate to reach out. I'd love to be able to answer them. Apart from that, I want to thank you for your time and hope to speak to you soon. Thanks again.